Hi, this is Paul from xBratTrading.com, and this is an Elliott Wave trading tutorial using the NinjaTrader version of our Elliott Wave indicator suite. Very, very simple. This is a stock. It's on the weekly time frame. The stock is team. What I want to do is just zoom out a little bit here just to show you that no matter where you isolate this has been a really good long wave free. Okay. The main thing we're interested in, remember, xBrat is there to make things simple. When we get this wave 4 pullback, this is what we're interested in right here. So let's zoom in and go through the tools. Very, very simple. Okay, so we've got the main chart there. We see the wave 3, the wave 4. The wave 4 has pulled back. It's found support in the amber zone. So there's an 80% probability that the price action, now it's found support, is going to go on and hit the automated target zone there. The center of that target zone is around about $545, something like that. So good target, good support. We've got to measure the behavior of this wave for a little bit further, remember. So we use the Elliott Wave Oscillator, part of the indicator suite. If I zoom in on that right now, you can see I've just done a Fib retracement. Highest point on the wave 3, okay. You see the oscillator coming up, coming down, and as the oscillator comes down, we need to crown between 90 and 140%, and it starts to move back up again. That's a good sign that this profit-taking pullback has behaved very well. The next thing we look at is the false breakout stochastic down the bottom here. So we've got these yellow dots on the top in the overbought zone along this wave 3. So that's a strong bullish trend, if you like. Then when it pulls back against that and crosses over in the oversold zone, it's like an elastic band. It wants to return to that overbought, to that false breakout stochastic. So again, this wave 4 oscillator's good, the stochastic's good. We've got the yellow dots on there. It's pulled against it. It's crossed over in the oversold zone. So everything's got a tick in the box. Simple rules. We've got a good wave 4 in the pullback zones, probability zones. Now we just got to look for an entry strategy. That's the next thing. So very, very simply, just look left. Where is there some sort of resistance? And I would say here we've got this bullish pennant just here. So let's just put that in, just to give us an entry line, if you like. So let's just highlight this here, right about there. Okay. And what I've done as well is pulled in these supports here. You see, this is these are weekly candles. You see how this support held there for quite a while. So this is a strong zone, and we want to make sure we're above that when we're entering. So a conservative entry would be the 6-4 moving average high, part of that Elliott Wave indicator suite here. So for this week's bar candle, it's all the way up here around about $390. For next week's bar candle, we are around about $379. So we've got options here. We've got a really great regression trend channel here, really strong. It's the wave 4, the profit taken on this Elliott wave has been orderly. Okay, it's been normal. Everything else ticks the box. So we can be aggressive, but what we want to do is work out our risk to reward against the aggressive and the more conservative entries. One of the things I'm going to put in first of all is just the stop loss. Okay, very simple, just below the wave 4. Okay, that's where the stop loss will be. Just colour that in red for danger. Okay, that's our stop loss, so that helps us. Now we're going to use a couple of entries. We're going to use an entry for aggressive, which will be through this support resistance zone here. So that's our aggressive entry. Let's just change that to green hashed or something like that. Some of the things you should be going through when you're actually working on these potential trades is to identify what sort of risk you want to take, and then if we just copy that, okay, and then I think it's not going to, let's face it, it's not going to breach this week. the 6-4 moving average high. So next week's candle position is here, okay, around about there. You see where it just breaches there, so I'm just going to put it a little higher. So that's our conservative entry there. Now as each week goes by and we don't actually breach that 6-4 moving average will come lower, so it may struggle to get through this resistance zone. So we've got options, and this is a weekly time frame. We don't have to make decisions straight away. So the next thing to do is use a Fib Extension, okay? This is to work out the risk to reward. And there's 3 clicks on the Fib Extension. There's the stop, so we click once on the stop. The second time on the, in this case, the what we call the aggressive entry. I'm going to put it over here out the way a little bit. Okay, and then the third click again on there. What I want to do is just change that. I've got a template here. I'm going to load up the template for risk reward. Okay, so we can see with this risk reward, 1 whole 1 risk for 200%, so 1 to 2, just under the target zone there, so 1 to 2.5, something like that. So that's a good risk reward with aggressive entry. Now if we're going to go conservative and we're going to go around about, this entry would be around about 385, what would our risk to reward be? So let's do the same thing again. Fib Extension, we click on the stop, we click on the entry, and then we're just going to put that template on for our risk to reward. Okay, so with that conservative entry, we're 1 to 1.6 to the top end of the target zone. So risk to reward is just within my parameters, because one of those last ticks in the box is that risk to reward, a minimum of 1 to 1.6. So that is a minimum of 1 to 1.6, the top end of the target zone. If I was to take the conservative entry going through 38356 with next week's bar position. So right now, for me personally, I'm going to go aggressive. Okay, we've had a great pullback on a lot of the stocks over this time, and now we seem to be have got great support, and I've got a lot of stocks on my watch list that look similar. So I'm going to go aggressive. I want to make sure it just breaches this support and resistance zone. So my entry is probably going to just be above 354. So that gives me a great risk reward. So if I were risk $10,000 here, potentially going to win $25,000 there. So if it struggles to get through here, you'll see the 6-4 moving average coming down. That conservative entry would probably be an option in the next couple of weeks. But right now, that's the way I'm going. I'm going to go pretty aggressive with this. Gives me a greater reward for that risk, and it's a sensible entry. So again, it's quite simple. This it's a checklist with this Elliott Wave indicator suite. This is the NinjaTrader version. Remember, on the website you can also see TradingView variants. So remember, checklist. We make sure that we've isolated that wave count, and then we've got this wave 3, wave 4 printed. We've got the probability pullback zones, and we've got the automated target zone. That helps us with that risk to reward and the entry. Then we want to look at that wave 4 performance. Amber zone, 80% probability. We've got the oscillator. We've measured between 90 and 140, tick in a box. We've got the stochastic, yellow dots on the top, pulled back against it, crossed over in the oversold zone, joined the wave 4, tick in a box. The wave 4 has behaved correctly. So what we've got to do is then just look for that entry strategy, work out the risk to reward, minimum of 1 to 1.6, tick in a box, go. Put stop limit order on and go. So this is an example for swing trading stocks. Okay, it works exactly the same on any time frame, whether you're on a 3-minute time frame for ES futures, or you're on a 15-minute time frame for Euro US dollar, or even crypto on a 4-hour time frame. It's the same thing. You get a big long trend, you get a wave 3, you get a wave 4 pullback, and you trade that high probability 5th wave move. You've got a simple set of rules. Tick in a box, tick in a box, tick in a box. Away you go. Put the entry strategy in, risk to reward, last tick in a box, away you go. It's that simple. Don't try and overcomplicate it. Hopefully this helps. Speak to you all really soon.